Now we turn to a noted growth investor who's been picking stocks for more than 20 years. He's here to tell us what opportunities he sees on the horizon. Let's get to West Palm Beach, Florida, where Louis Navalier is there. He is CEO and CIO of Navalier Associates. And Louis, thanks so much for being with us.
It's an honor.
Okay, so it seems to me that we're in some type of breather mode, at least talking to some of the traders this morning. I mean, what can you tell us now that we're seeing stocks down again today? I mean, what can you tell us of what we've seen in the markets so far as you take a step back?
Well, one of the things that's causing all this uncertainty are these Treasury financings. We have $104 billion to auction off this week, and all these securities are within the Fed's quantitative easing range, so we're all going to be on pins and needles watching whether the Fed intervenes in these auctions. And it's getting to be a problem. I mean, we're auctioning off more money than the market can absorb.
And so thus then, Louis, does that mean that you see a market that's going to get hit hard in the equities, that you're going to see some pretty sharp declines going forward from here?
Well, I think it's just more consolidations. There's not a lot of news right now, and the big news is the deficit financing, the fact that the Treasury auctions have caused the 10-year yield to more than double this year. Bloomberg obviously reported, did a very good piece last week on how China is actually cutting their investments in Treasury securities. And it just creates a lot of uncertainty. And we're all, of course, watching the U.S. dollar. It may be rallying this morning, but it's been on a slippery slope since mid-March.
Louis, a lot of analysts are seeing a pullback ahead for two reasons. They see lower volumes at the New York Stock Exchange measured month by month, and they also see fewer people committing big money to the markets. Does that gel with what you're doing and with what you're hearing about?
Yeah, the market had 12 straight weeks of inflows from the mutual fund industry that were kind of bidding things up, and I think a lot of managers were scrambling to invest their cash. I think the real problem with this market is the leadership. You know, some of our leaders since March 9th were things like AIG, Fannie, and Freddie. And earnings were down in the first quarter. They're going to be down in the second quarter. And I'm betting on the stocks that have good earnings will emerge as an oasis here. And that's so I don't really see the market getting firming up till after the 4th of July.
Well, can you be more specific on that, Louis? I mean, who are some of those stocks, or which are those stocks? I mean, are they grouped into certain categories or what?
No, most of them are pretty much special situations. So something like an SQM, which is a Chilean fertilizer company, is doing well because fertilizer firmed up, and they also are a big supplier of lithium, and the lithium batteries are, you know, obviously in cell phones and will soon be in vehicles. Any stock that earns money kind of amidst the chaos is really emerging. I think energy and ag will be pretty impressive here because as the dollar got weaker, that firms them up naturally, although today's a soft day for them. You know, and also the multinationals should firm up considerably because the weaker dollar fuels the profits of whether it's a Procter & Gamble or a McDonald's. Their earnings will be much, much stronger with a weaker dollar.
Louis, after we get past this period of consolidation this summer, where do you see the markets ending the year? You see them much higher from here?
I think so. I think the problem is these green shoots that everybody keeps talking about are interesting, but the Fed in its last FOMC minutes revealed that they didn't see any green shoots and lowered their forecasts. And the unemployment problem is a very, very severe systemic problem right now. It's going to be very hard for retail sales to get a lot of momentum. However, we're going to have very easy year-over-year comparisons in the upcoming months. And so the headlines are going to be pretty good, and I think you will get a fair amount of money flowing in the market later in the year.
Louis, quick question. Of course, the healthcare debate is intensifying. The president is going to have a town hall meeting that's going to be broadcast on Wednesday evening. Where do you see pharmaceutical companies in this context? Is this a group that you're looking to shy away from or invest in?
I'm not scared of the pharmaceuticals at all, whether it's a Teva Pharmaceutical in Israel, a Baxter and Abbott. I'm not really scared of those stocks. It's the health insurers that seem to be much more nervous going into this debate, or even things like nursing home companies. But President Obama, of course, told Congress we can't borrow anymore. We have to start paying for things. And so they're trying to figure out how to pay for it. And I think that's really why it's stalled, is the deficit finance we're doing, we've reached our limit. So I really don't expect a lot to come out of it.
Okay, Louis, thanks so much for joining us and giving us your thoughts on the markets. Louis Navalier of Navalier Associates. And